Let's unpack the market movements now with Gary Booysen from Suisse. Gary, thank you for joining us. So Jerome Powell, the U.S. Central Bank Chair, again saying that interest rates may go up again. The local market was fairly strong through most of the day. Did those remarks have any impact?
I think they did have an impact. We saw the currency weakening. The currency started weakening at around 11 o'clock, but certainly the way that Jerome Powell was talking tough on inflation didn't help matters. There's still a big divergence between what the market is expecting the Fed to do and what the Fed is saying it's going to do. So Jerome Powell indicating today that we're probably in for another 225 basis points hikes, so about 0.5% in this cycle. Also not ruling out that the hikes could come in back-to-back meetings. The market, however, is only pricing in a 20% chance that we'll get two further hikes. It's about an 80% chance that we'll see a 0.25% hike in the next meeting. But with the tough talk, obviously, higher interest rates in the US makes the US dollar relatively more attractive. You start to see capital flowing towards the US dollar. It does put pressure on overall markets. And we had the S&P 500 index slipping negative. It's just poked its head out now and it's trading green once again. But it does look like central banks looks like they are going to stand firm, but the market still doesn't believe it. They still think that we could potentially get an interest rate cut this year. I think maybe first quarter next year we'll see the US cutting.
Well, we're all hoping for that interest rate cut, but let's look at the rand now. We definitely saw the rand taking a hit, though, down by 1% today. It's around about 20 cents down to the greenback. What do you make of that?
So it's a little bit of risk-off trade. So whenever you see nerves creeping into the market, generally you see emerging market currencies being sold off. So it's a little bit of that lifting the currency. We are seeing a recovery after the speech. So we have 1866 currently. So staging about a 7 or 8 cent rally currently. But our currency is fragile. There's no question about it. We've seen obviously that big retracement down from around 20 rand to the US dollar. That was largely on the aggressive interest rate hike that we saw from the South African Reserve Bank. I mean, hiking 50 basis points or 0.5%, helped to just improve our real differential in interest rates between the US and South Africa. So that's definitely helping. I think the reduced load shedding stage is also helping to spur some optimism, and that also helping to improve things. But overall, there's a big risk premium to investing in South Africa currently, and especially with our I suppose not close ties, but our non-aligned stance with Russia, and that uncertainty around our prospects fuels volatility. So that's why you're seeing the currency bouncing, the rand dollar rate, for example, between 20 and 18. I mean, that's an absolutely enormous range for a currency to move, but that's the reality of the situation, unfortunately.
So we talked quite a bit about Naspers and Prosus yesterday, about the removal of its complex cross-holding structure, and it paid off for Naspers today, still standing strong in the markets today.
Yeah, up another 3.8%. So definitely the market is liking the simplification of the structure. Essentially, Naspers is going to own 43% of Prosus when I suppose it's all done. It should be done in the third quarter. And what they're essentially going to do is both Naspers and Prosus are going to issue a whole lot of shares and not follow their rights. Prosus is going to be totally diluted, and then they'll do a share consolidation. So it's a bit of financial engineering to clean up the structure. I think it's what market participants have been asking for, but also the idea that they can continue to buy their own shares, which is also a type of financial engineering. But when pre the announcement, they were trading at around a 50% discount to NAV. So if you look at the sum of the parts and you kind of you can value all the listed businesses like Tencent, for example, inside it, and it's just way too cheap. So in that situation, it makes sense to be buying your own shares. Unfortunately, they are obviously going to sell down some of the Tencent stake to fund that through dividends, and that will unfortunately put pressure on Tencent, but it's also Tencent has slipped a lot with the higher interest rate environment that we're in currently. So I suppose some criticism can be leveled at management around the timing, obviously, because this is yet another attempt to unwind the discount, and the previous ones have been unsuccessful so far. But hopefully they get it right this time, and hopefully it pays off for shareholders.
Lastly, on the international front, following a near global banking crisis earlier this year with the collapse of Credit Suisse in Switzerland, the bank UBS, who took over, is now planning to cut thousands of jobs. Was this to be expected as with any other takeover?
Yeah, I think everyone knew there was going to be big job cuts between the two rivals, and I think most of the job cuts are going to be felt in the Credit Suisse workforce. So they're talking about cutting about half of the Credit Suisse staff. That should be, just to start with, around 20,000. But ultimately, what they're looking to is actually push it up to around 35,000 people laid off. That's going to be about 30% of the combined workforce. And the reason they're doing it, it makes sense. Obviously, there's a lot of duplication of duties, duplication of infrastructure when you have two banks this size merging together. And at the same time, there's also precedent for it in the market. With I suppose the automation and the changes that we've seen in big global banks, and obviously the difficult economic environment that we're facing. This isn't outside of what's happening in the industry. We've seen the likes of Goldman Sachs, Morgan Stanley, each cutting around 3,000 jobs. So it's something that I think was to be expected. One, given the environment, but two, just given the cleaning up of the structure of the new combined entity.
Thank you so much, Gary. That was Gary Booysen from Rand Suisse.